It's Brian Preston, the money guy.
Hugh has a question for you guys. We're outgrowing our house and want to add an extension. Should we liquidate our after-tax account to pay for it or take out a home equity loan to finance the construction?
Yeah, so this is a really difficult one. I'm going to go and give you the disclosure you know is coming. We have to be careful. We can't give you specific advice because your unique situation is unique. In some scenarios, the best, most optimal strategy might be to liquidate some of your after-tax assets and just pay cash. And in other scenarios, the correct answer for that person might be to utilize a home equity line. So what we'll kind of talk through are what are some things that you should think about and how should you think about approaching the decision, but we're not going to be able to tell you which one you should do because it's not always the same answer for people in very similar situations.
Yeah, I mean, there's several things that you need to be thinking about. First of all, how easy is it to get to that after-tax money?
Easy meaning like cost prohibitive from a tax standpoint?
Yeah, I mean, because if you let's just say the extension is going to cost $100,000, and you have an after-tax account, and I'm just going to go ahead and say let's just make up a number of like $150,000. So you'd still have, if you knew that cash reserves you only needed to have $50,000, but you have this after-tax account that's worth $150,000, and you could get to it. That seems, if you didn't have a big tax bill, where you had to pay capital gains to get to it, that would be pretty powerful. Because I know even with where the high yield savings rates are right now, 3% is going to that's what you're getting paid on that $150,000. It's probably going to be substantially less than the 6.5% to 8% that you're going to pay on the home equity line. So that becomes an analysis of how hard is it for me to get access to my capital, and I'll try to balance that and take the path of least resistance. Now, for home equity line, I always get nervous about debt, so I always try to make sure it's a measure twice type thing. But also, there are times where I think debt can be your friend, especially if you're in one of these situations where, let's say you have a good cash reserves, but you have an after-tax account, but it is locked up into appreciated holdings. But you're also in a great income situation where you just know at your level of income and what's coming in with your disciplined life that this renovation could be paid off in like 3 years because you're just upcoming cash flow payments. Now, nothing's guaranteed, but you just know, hey, it's crazy for me to blow up all this other stuff when this money might be able to be paid off. And I said 3 years. What if it's 18 months? Because I've had situations with clients where they actually could get access to more money. They had bonuses or they had a big windfall coming their way from a distribution or a land sale or a business sale or something. So we just needed a bridge to get them through the 6 to 9 months before, debt can be your friend on that type of stuff because it's not like you're blindly doing this out of lack of discipline or taking on more risk for the sake of taking on risk. This is actually a strategic way of using debt, trying to balance how do I get access to my assets at the lowest cost, but also maximize the long-term opportunities. That's the type of critical thinking skills that I want all my financial mutants to kind of develop so you can kind of balance out those critical thinking things that you have to figure out.
But there's an opportunity cost that you have to make sure you're aware of because right now, in this moment today, if you're taking, I'm going to use your number, $100,000 out of the market, you're liquidating, getting rid of it, that's $100,000 that's not working for you. So when I think about doing a renovation, I'd have to really do some soul searching and say, okay, do I have another baby on the way? And this renovation is necessary in order for our family to fit into this home? Or is this renovation like putting a patio on the back that I just want to enjoy more? If it falls more into the latter category, more into the, maybe I don't need it right now, perhaps the better strategy, and this is a little bit of cold water, not to sound terse, is to save a little bit longer for that. Maybe instead of pulling that $100,000 out, you start thinking, okay, over the next 2 years, over the next 18 months, I'm going to save up and save up and save up and save up so that I either have cash to pay for the whole renovation or I have a big chunk of cash to pay for that renovation. Because all else equal, $100,000 invested today is probably worth more than $5,000 invested monthly over the next however many months it would take to get to 100,000. I don't know public math. So I would just think through that decision about how you approach that and recognize what are the things that are like necessities. I need to do this to my home to make it more livable versus I want to do this because it would just add to the utility. Wants, I think maybe your timeline could stretch a little bit if you're having to like liquidate your investments to be able to do it.
These type of questions, when I start itching, because I wish I had a computer with a spreadsheet in front of me, I know it's a question that we can't give you specific, obvious answers, but we did try to give you all the variables that you need to be thinking about, because how easy you get access to the money, what you're making on the account versus what it's cost to borrow money is going to have an impact, as well as just what your income. There's so many different variables here that I'm just itching to be able. This is why working with a financial advisor, especially a really nerdy financial advisor, can be really beneficial, is because it's amazing when you kind of run scenarios on a spreadsheet, how the clarity kind of comes before you. If you have that skill set, I would encourage you, go do a spreadsheet and run these different scenarios that we just figured out, and you'll quickly be able to figure out what's the path that maximizes what your best financial decision is, taking into account all the variables. If you don't have that skill set, then I would encourage you to try to find somebody to help you work through some of these heavy decisions.